Welcome to the August 3rd, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your fast-paced weekly tour of the global financial markets. Here, the Dow Jones Industrial Average we'll get to, but could there be any more bad news compared to the first half of 2020? Well, the good news is the most horrific news is likely over from the second quarter. And I'll prove that to you in the slides that are about to unfold. And I'm going to break down the U.S. economy and what happens from here, as well as the greatest dangers and the asset classes that are likely by this time next year to deliver the best returns and those that may not. This is the Dow falling from 29.5 down to 18 as we've covered, and this week finishing around 26,000. This is on the heels of the GDP report. The GDP report reported a 33% drop in the economy. That's an annualized drop, and I'm going to take those numbers to something that is very educational for every investor and something that we need to know, along with some projections for this time next year. I want you thinking about August of 2021 as one of your sources. Think of August 2021. I know it's hard to do 12 months in the face of the headlines you're seeing and the upcoming election and all that we're hearing that may be dire predictions. We had more dire predictions in early 2020 than at any time that I can remember in recent history. But this is the Dow at 26 versus the 29.5. We'll call it a minus 10 for the year so far. And if we go to the QQQ, what happened here? This is a 20% increase in the value from the start of the year after a brief correction, and it's driven by 5 companies. 4 of those companies testified in front of Congress this week and got a spanking on the left side and the right side. Ouch. And they have great dangers ahead, but I'm going to tell you more about that in a second. So this is the only thing driving the Dow and the S&P right now is essentially 5 companies. That's a dangerous situation for tech investors. We saw it in 1999. Let's get back to the U.S. economy overall. When we look at this, this is what was reported this week. A 33% decline in real GDP. That's annualized. We looked up the numbers. We're numbers guys at McGowanGroup Asset Management. Thanks to Harrison Smith, Andrew Orton, Alex Tolene, Stephen Norris, the whole team, including Joyce Chang. This is the team that cares. And our operations manager, Karen Duckworth, and a shout out to Izzy Sanchez that makes all this possible. When you go through everything that's happened, and Vanessa Avila, our technology manager, this team is so devoted to your success, you've got to come in and see it. And yes, you can come in a mask and we'll give you a free temperature check and hand sanitizer. But notice we're figuring out how to operate forward, and the U.S. economy is too. We are already 1 month into this quarter. What does this mean? Here was the horrific news, a 1/3 reduction in GDP. Well, what it actually was is 1 quarter that went from 5.4 trillion down to about 4.9 trillion. There was a $500 billion reduction in economic activity, even though we were quote unquote shut down in the month of April. So there's the damage. It's 10% off of the second quarter GDP, about 500 billion. What's this projection? An 18% annualized increase. So that means about 200 to 300 billion restored to that GDP number. And it keeps going up from there. We're already a month into this. What does that mean? likely record GDP somewhere at the end of 21, early 2022. So let's go a little bit forward. Right now, the Standard & Poor's 500, the 500 biggest companies in the U.S., capitalization is a big issue. You know, at some points, different industries have reached 20% of the S&P, which is usually a danger signal. So, Apple, Microsoft, Amazon, Facebook, and Google, 4 out of those 5 appeared before Congress to get spanked from the left and the right this week. And they may have liability for their social media postings and lack of postings or censorship, as well as antitrust, which was an attack this week. So they're pretty much under fire, but they make up 20% of the S&P index. That's a danger. When the market is that thin, and sometimes all the money's flowing into just a few names, leaving behind companies down 20, 30, or 40, or 50% for the year. But I just showed you the cycle. What is the cycle? By 2022, we're already likely at record GDP, and based on the 9 million jobs restored so far, that's just May and June, not counting July. We'll have those numbers for you next week. So be sure to tune in, YouTube McGowan Group, and subscribe. Also, go to NetWorthRadio.com, fill out the preliminary client questionnaire, or just ping me if you're an existing client for an updated plan. We're great at Zoom meetings, and we're also great at in-office meetings safely under COVID-19. But the collapse of these stocks in 1999, not these particular ones, but the leading stocks, led to an 80% decline in the QQQ I just showed you. Is that a risk you're willing to take? Or would you rather secure 7 or 8% income? 8% over 5 years is 40% in assets that are likely 20 to 30 or even 40% higher by this time next year. That's the strategy. The forward income at 8% gives you 80% over 10 years, and you're not exposed to a potential 80% collapse in the technology field under almost any set of disappointments. Why are these companies leading? Because they were immune to COVID. Well, we're in a different part of the cycle now. We just digested the worst of COVID-19. Where do we go from here? Well, for the rest of 2020, you're likely to get continued good news. Just like last week, we reported we went from 133 million employed to 142 million. That's 9 million jobs added. A record would be 159 million. We're on the path to recovery even with COVID-19. Do we need to overpay at 30 times earnings for immunity to the virus? Maybe not. And the question is, who are the winners as we restore? Last point, 2 parts. Hugely discounted global high yield bonds. Money markets pay 0. These pay about 8%. Then I go to energy infrastructure. U.S. oil demand actually reaches 2019 levels, fully recovered by August of 2021, according to the EIA this week. What does that do? Well, for energy infrastructure, it restores a potential huge gain from here plus record income. So those categories are much better than 0 in a money market or paying 30 times earnings for companies that at the slightest stumble would come back down to reality. I'm Spencer McGowan, your financial weatherman, President, McGowan Group. Visit me at networthradio.com. Message me there. I look forward to seeing you here at the Crescent. Thank you for tuning in. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.